Good morning and welcome back to Almus Market Mornings, your daily dose of global financial updates. Data continues to pour out of the Western economies where traders have continued to reprice their rate cut bets. We had a few PMI numbers which indicate how the manufacturing and services side of the economy is doing. BOJ continued with its stance of ultra easy conditions, but it's crucial we understand the commentaries given. Good morning, JK. I'm sure you'll cover the rate decisions and PMIs, but apart from that, seems it wasn't a good day to be bullish on India yesterday. Your thoughts?
Yeah, definitely not. It was a very, a big sell-off day in Indian markets yesterday. Of course, in terms of percentages, it was around 1.5%, but it was a broad market fall. And it is the second day of big sell-off that we have seen in the last 10 days. Of course, we ascribe this to profit taking from large players after having seen a huge rise in the market over the last 2 months. Nearly 10% rise was seen after the state election results. And FIs have been big sellers after 2 BO sell-off in equities in earlier this month. Yesterday was also a negative day. However, good inflows for the bond market have kept the net flows flat so far. On the global market, you have markets moving in different directions. Like S&P 500 made an all-time high again yesterday, and the Dow also made a new all-time high but did not sustain. Nasdaq seems to be a bit away from those highs. On the other hand, we have the Japanese market, which has actually been going up throughout this month, gaining more than 10%, but it's stalling in the last 2 days. Perhaps looking at what is in store as far as the monetary policy is concerned, BOJ did not change anything on their policy. Their future guidance was very, very subtle in the sense that wage expansion is what they are looking at, and it gives us a feeling that the wage rises, which are expected to be high, will lead to a change in the policy somewhere in April. That is how the market also read, and the yen was stronger immediately after the decision and the press conference. But since then, it has weakened with April being 3 months away, and we do not know what's going to happen in between to the global economy. However, the stock market, which is our focus, is that the Japanese market has been stalling. It has been actually seen some profit taking. Now we have already talked about the Indian market, where we had a big profit taking, resulting in a big sell-off. Chinese market, which has hit a 5-year low, or rather, below the COVID lows, was the major focus of the markets. And then obviously that's a major focus of the government and the regulators there as well. And they have seemed to have awakened, and there are talks that there will be a huge rescue package that is being worked out. The amount being talked about is in the region of around 2 trillion yuan of a package to support the stock market. And the very talk of this has actually pushed the stock market to some extent on the higher side, and the yuan, which had tended to break into 7.25 a few days back, is now well below 7.20. And for the first time, we are also seeing the offshore yuan trading at a discount to the onshore yuan. And normally, when such a thing occurs, it means that the speculators are actually unwinding their long dollar positions, and it could be some sort of a hint that yuan could be in for a period of corrective strength. Similar thing happened in September 2022, after which we had seen yuan move from 7.30 to as low as 6.70. Not sure whether it's going to repeat, but definitely the kind of oversold condition in which we are seeing the stock market and also underperforming yuan, a good correction is not ruled out if the authorities really come out with a strong measure to support the markets. On the bond markets, the longer end has been rising, shorter end has been stalling. Thus, it is steepening the curve. The focus is as much on the issuances that is going to come from the Treasury, as well as on the monetary policy decision, which is just 1 week away from now. Fed decision is due on January 31st. Of course, we have the ECB meeting tomorrow, Bank of Canada today as well. But these pale in significance, and in the front of the FOMC decision and the forward guidance that we are likely to get from there. March, rate cut is well below 50% probable now, and also the markets are now looking at how many rate cuts will there be this year, which is definitely not six. That is what the current indications are. Dollar ground higher with the reduced expectations of March rate cut, and the dollar index seems to be eyeing 104 target in this correction. Among the major currencies, sterling remains the strongest due to higher yield, and yen continues to struggle with to maintain the recoveries despite some people in the market reading the BOJ governor statement as hinting at a April move in monetary policy change. Euro, of course, some deeper correction is on the cards ahead of ECB. Again, we are looking at the forward guidance from Lagarde. That will be very crucial. On the data side, interest will be on PMI survey. We already had one from Japan where the manufacturing continues to struggle, but the services are holding up. Again, focus is on how the manufacturing is performing on the other major global economies, because that has been on the slide for several months now, but the services are holding up. So that whether this trend is maintained is what we'll be looking at. We also had the Japanese trade data today. The good news for Japan, where the exports have risen 9.8%. Their exports to China have risen, and the trade balance shows a surplus of 62.1 billion yen versus 780 billion of deficit last month. So the dollar seems to be on a corrective mode, but again, I would say it's a very divergent move across currencies. The rupee also has been on its own path. Yesterday, it was slightly on the weaker side. Strong buying on dips was seen, even as the stock market took a hit and the sentiment was somewhat sore. And maybe the outflows related to stock market can have some can give some push to the USD INR today. But again, 83.20 remains a very strong hurdle that has been holding this month. So a breakup that can probably see 83.25 and 83.30, not seeing beyond that for the time being. Thank you.
Thank you, JK. And just quickly summarizing equities, it was a mixed day. In the Indian markets, we saw a big sell-off, around 1.5% for the benchmark index. And globally, S&P 500 and Dow have made all-time highs, while Japanese market, which was performing quite well, has been stalling for the last 3 days. And what's interesting is that the Chinese market hit a 5-year low, and it is below its COVID lows. Now there are talks of a rescue package worth 2 trillion yuan for the stock market. So that's something markets will be following. And for the BOJ rate decision, the further guidance which market got some cues on is that there could be a possible change in policy in April, but those were very subtle hints. So April is still far, and I'm sure markets will be taking into consideration data which comes out till then. We have the ECB meeting tomorrow and Bank of Canada meeting today, which will be of importance. And for rupee, we continue to see somewhat of a buy on dip sentiment being played out. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.